This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome, and this is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 8/20/8/20. This is show number 107. I don't know why I'm so excited, Nick. It's a boring summer Friday.
Well, it's the end of the week, so that you have something to look forward to. And, it's just another day where the markets are higher really across the board. And, again, the summer volume has been very, very light. I should say the August volume, but that does help to lift equities. Yeah,
so end of the week, second to last trading day of the month, things are up. And what sectors are particular going up?
Well, today we have pretty much a pretty broad-based move overall. We've seen a little weakness really in the biotechs today. We've seen a little weakness in some select names, but really for the most part, most sectors are higher. Really, it's a pretty good advance overall. The volume is super light, so let's just keep it in perspective. But, that doesn't mean we can't go higher. So the market's right now holding up very, very well, and it's a broad-based advance for the most part.
Yeah, so one theory out there, and I don't know if you agree with it or not, that the market's not going anywhere until the financials start moving. Do you agree with that?
No, I actually don't agree with it, but it would help. So the markets have gone up from, the March lows to where they are now, and now you have the Dow and the Dow joining the party back into positive territory. It's flat for the year. The S&P is up about 7%, and the NASDAQ's up almost 30%. So, the markets have rallied up without the financials. The financials are still lagging. Take a look at J.P. Morgan. It's trading at around $102 right now. The low in March was around around $76, I believe, $77, around there. And it's nowhere near its February high, which was around $140. So, again, markets can go higher without the financials right now because you do have leadership in other areas. But it does help if the financials can lead, and it would be a positive if the financials could just play catch-up and get back to where the other indices are. But, markets can go higher without the financials these days.
Yeah, agreed. Can see that right away from there. How's our housing doing? Because housing has been of all the things since the pandemic, the global economic crash, the strength of the housing sector, and obviously it's interest rate driven, has been outstanding, stupendous, totally contrary to what you would think would happen in this type of financial environment.
Yeah, housing remains very, very strong. In fact, the Homebuilder stocks are still really right at their highs. They have pulled back a little bit this week, but it's coming from an overbought parabolic condition. So they're going to need to consolidate a bit or maybe even pull back a little bit in the near term. But, the trend is up. They've been very, very strong. But I would not commit new money to the housing stocks at this stage of the game, despite a very strong chart right now, just because they're overbought at the moment.
All right, so they're overbought. So, all right, that's good to know. Took some profits today?
I took some profits yesterday. Yesterday I took a little bit of profits in Charles Schwab, and I also took a little bit of profit in the TBT, which is a bet on higher yields. So, basically just around little under 5% on both of those trades. I took half off the table, but I'm letting those stocks run, the TBT being an ETF, but I'm letting them run for bigger gains down the road.
All right. So you're calling for higher rates, unlike everyone else here, huh?
That's right. I am calling for higher rates, and I do believe that yields have bottomed.
All right. Well, you might very well be correct. At some point, they got to go up. We can't be giving away money for nothing like we're doing now, can we?
We can for a bit longer, but, the market will tell us differently. I'm going off of a big cycle pattern, and if it plays out like I think it will, we're not going to see, rates scream higher, but they're going to go, quite a bit higher than where we are currently. So I think traders and investors should take note of that. And I've been, pretty much saying it on this program for a while that, I ultimately think the lows are in for bond yields. So if you're going to take out a mortgage, or you're going to buy a new car, whatever you want to do, this is the time to do it, because when they go higher, you're going to miss that boat.
Yeah, I can see that coming. And, one thing we talked about, which I think is interesting, and we're going to talk about gold and silver in a minute, but gold and silver, the exact opposite of the stock market, because the moment the stock market that the Fed takes its foot off the monetary pedal, off the accelerator, generally what we've seen over the past few years, really since 08 and 09, the market will crash very quickly. The moment that the Fed or whomever is suppressing metals prices, takes their foot off the neck of precious metals, they skyrocket higher.
Yeah, I'm going to agree with you 100% there. And, if you take a look at the precious metals, I'm looking for what we call a zigzag pattern down to get into gold. But today, gold is soaring and roaring. I mean, we have, a sell-off yesterday, and today gold's up $48. So, there's constantly somebody in there buying it up. There's constantly somebody in there really absorbing any sell-off. And, again, that's a very, very bullish characteristic for the precious metals, which, longer term, I think they're going to go a heck of a lot higher.
Yeah. Hey, so silver today also up, but gold seems to be the main performer, huh?
Well, no, silver is having a really, really good day as well, up about 2.5%, which is pretty much in line with what gold is doing. Gold's up 2.5%, and silver's up 2.5%. They're both in line together, doing very, very well.
Yeah. Hey, well, that's the thing. This really does remind me of what the market was like in 2010, 2009, 10, and then into 11. So these kind of, parabolic and really strong moves. We had strong days. Sometimes we had $100 up advance in gold. We haven't seen those $100 days yet in this market.
Well, I'll tell you this much. Not yet, because gold has not taken out its recent top. But the higher the price of gold gets, the bigger the moves will get too. So just think about it. We haven't seen many $48 or $50 moves. Today we got a $48 move in gold. So just remember, the higher the price gets and the more it consolidates there, the more you're going to start to see bigger type of moves. And they could happen on the downside too. But overall, the trend is up. What gold is doing is just trying to work off that parabolic move, that overbought condition. And again, it topped out on the 7th of August, but right now it's working it off. And that's what you look for ultimately, if you want to see higher prices ultimately.
Yeah, it's really 3 weeks to the day that it peaked. And the consolidation periods don't have to be any set length of time, do they?
No, they don't. It's just about the pattern. I'd love to see if gold can pull back into that 1850 level. I think that's a golden goose opportunity.
So 1850, but when you see it has a down day and then the next day it recoups the entire loss of the day before and goes somewhat higher, that's a really strong pattern, isn't it?
It is. It's what we call a test candle. And when we look at it on the charts, when price action goes down and it reverses back up, somebody's testing that level. And the longer you can base at that level, when a breakout does occur, it will go a lot higher. So very strong action for the precious metals. Again, we'll see what they do next week and in the next couple of weeks. That'll be important. But I'm watching this pattern very, very closely, and we'll be updating it on a daily basis.
And one pattern we see a lot with gold is that when we get to a holiday with very low volume, it tends to get slammed, right? And so watching it for the upcoming, I guess it would be the
Labor Day.
Labor Day is the 7th. So on the 4th, September 4th, which is next week, that would be that Friday. If we see it get slammed, or if we see it go higher, what's that going to tell us?
Well, I'm not so sure what's it going to tell us in the short run, but if it does get slammed, that's better for everybody, because if anybody's looking to get in, you're going to get a better opportunity. So I'm in the camp that if it does get hit and it sells off, that's good news for everybody that's looking to get back in it.
And finally, next week is a holiday week. It's the last official week of summer, of the summer vacation, and this is a completely anomalous year because of the COVID. We get into all of our beliefs about it, but we're in the COVID 1984 realm here. But still, it looks like people are just kind of easing off, taking it easy for the last couple of weeks in August. And so this coming week, what do you think we can look forward to? Because kind of like an options expiration week where the big guys can really do whatever they want with the market and nobody can stop them.
Well, that's a possibility, but historically speaking, we're going to have a light volume trading session because a lot of people will take vacation. In fact, next Friday, the market, and this is not 100%, but usually it's almost like what we call a pre-holiday session where you just get, computers trading back and forth to each other. Humans are not even around. They're usually in the Hamptons or wherever else traders go for holiday. Leading up to the summer bash, which we call Labor Day. So, I'm not really expecting a whole lot for next week, but you can never rule out any geopolitical events that could take place. And as I've been saying here, we are in that, final climactic 60-day period before the election. So you still got to be a little bit cautious.
Who knows? You might even see Joe Biden, Papa Joe Biden, or sleepy old Joe. You might even see him get replaced next week. Wouldn't that be amazing? What would that do to the markets, Nick?
I gotta say, it would rattle them. But I've said it all along. I don't even think he's going to be the candidate come election day.
Yeah, that's what. Hey, I said it a year ago, and I really believe they had to make him the nominee because otherwise Bernie would be the nominee now. So they had no choice but to fall in behind him. Not to get into politics, but I think it's important in this situation because, like you said, we're in the run-up to the election, and the election news cycle is going to dominate. And since we're dealing with psychology and human nature, uncertainty, all these things are coming into play here. So that's the only reason why I mention it. Just think, Nick, when it happens, you and I were ahead of the curve by months and months. We should be on the cover of Time Magazine, The Economist, Forbes, Fortune, for having called that Biden is going to drop out before anyone else. But for some reason, I don't think it's going to happen, Nick.
I don't think it's going to happen either, but I do think that he will be replaced as the candidate.
Yeah, well, if not now, then certainly after the first debate, because they will be out there changing his depends openly because it's going to be a real show. For sure.
I don't think we're going to see a debate. I don't think they have the courage to do that. I just don't. I honestly don't think there's going to be any debates. They've already pretty much said there won't be.
That would be driving the car in fourth gear with the doors locked and the windows up right off the cliff. That's for sure. A little James Dean action there.
That would be.
But he said he was going to beat Trump like a drum, so who the heck knows? We'll see what happens next. Anyways, that is it for now. Check out inthemoneystocks.com for Nick's detailed historical trading record, and check out the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Email us. We love getting your emails, kl@kerrylutz.com. Nick, we will pick up on Monday.
Sounds good, Kerry. Have a great weekend.
You too. And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.